Roblox. It's this massive digital universe for millions, right? Well, it just got a very real reality check from Wall Street. And yeah, that sent its stock tumbling. So today, we're going to break down exactly what happened and, maybe more importantly, what this all means for the future of the platform.
You know, when a platform this big hits a speed bump, it's not just the investors who sit up and notice. It's all those brands, the countless companies building their futures inside its world. This whole thing is a story about some pretty huge numbers, some really high stakes, and a fundamental disagreement about what's next for this digital giant.
All right, so here's our game plan. First, we'll talk about just how big Roblox is. Then, we'll get into that specific warning that really shook things up. After that, we'll look at the actual data behind it, see how Wall Street is totally split on what it all means, and then wrap up with the big question this leaves for every investor out there. Okay, so first things first. To really get why Wall Street is getting the jitters here, you have to understand that Roblox isn't just, a game. It's this sprawling digital universe, and its influence is just incredible. I mean, check this out. Financial firms like B. Riley, they don't just throw words like next-generation entertainment platform around lightly. No way. They see Roblox as a foundational piece of the future of entertainment. And that's exactly why every little move it makes gets put under a microscope. And this right here, this is where its real power lies. Roblox has become this massive commercial force, especially with Gen Z. I mean, think about this for a second. 70% of users are wearing branded virtual stuff on the platform. And get this, 64% say that what they see in the game makes them more likely to go out and buy from those brands in real life. That's a huge bridge between the digital and the physical world. Okay, so you have all that massive influence, right? But a red flag just went up. And believe it or not, a single report from just one financial analyst was enough to put a serious dent in the company's stock price. So what was the damage? Well, here's the immediate fallout. On Tuesday, January 6th, Roblox stock dropped 5.4%. Now, in the super fast-paced world of finance, a single-day drop like that, oh yeah, that gets everyone talking. So what was the trigger? It all came from a report by an analyst named Doug Kreutz at TD Cowan. And his big concern wasn't that Roblox was shrinking. Not at all. It was that its rate of growth, its momentum, was starting to slow down, and way more than anyone expected. So what's an analyst do in that situation? Well, he cut his price target for Roblox, dropping it from $77 all the way down to $70. And he kept his official rating on the stock as sell. That's basically a direct signal to investors saying, hey, based on this new data, I think this stock is overvalued. And hey, just so we're all on the same page here, a price target is just an analyst's best guess about where a stock's price is headed. So when they lower it, yeah, that's a pretty clear sign that their confidence is starting to shake. All right, so what was the data that caused all this fuss? This wasn't just some gut feeling, This warning was based on very specific numbers that track what users are actually doing inside the platform. The key thing to see here is the trend. Look at October. Year-over-year growth in hours spent on the platform was a whopping 110%. Huge, right? But by December, that number had dropped to 74%. Now, let's be super clear. It's still growing. But the speed of that growth, the momentum, that's what's slowing down, and pretty significantly. And this number, this is the real kicker. During the final week of December, the peak holiday season, growth was down to just 66%. And the analyst pointed out that this was the lowest holiday season growth Roblox has seen in at least 4 years. Ouch. Okay, so to really get the financial impact, we have to talk about something called bookings. It sounds technical, but it's really just the term for all the money users spend on virtual stuff like Robux. It's a super critical way to measure the financial health of a platform like this. But now, here's the twist. The same analyst who sounded the alarm, he still predicts that Roblox is going to pull in an incredible $2.24 billion in bookings for the quarter. That's a 65% jump from the year before. So what gives? Well, this really gets to the heart of how Wall Street thinks. It's not always about the big, raw numbers. For these high-growth stocks, a slowdown in momentum, even when you're still going fast, can be a bigger red flag than just one bad quarter. But here's the thing. TD Cowan's bearish view is just one side of the story. If you zoom out a little, you find that Wall Street is completely, and I mean completely, divided on where Roblox is headed. Just look at this table. It really says it all. On one end of the spectrum, you've got B. Riley screaming buy with a sky-high $125 price target. And then on the other extreme, you have TD Cowan with that sell rating and a $70 target. And in between, you've got everything from hold to neutral. This is a perfect picture of a really divided expert community. And the reasons for these ratings are all over the place. The optimists, the bulls, B. Riley, they're looking at the big picture, the future of entertainment. Morgan Stanley is also optimistic, kind of shrugging off potential hurdles down the road. But then you have the more cautious folks like JP Morgan and, of course, TD Cowan. They're laser focused on the immediate challenges and that slowing growth data we just looked at. And all of this brings us right to the central conflict in the Roblox story right now. It's really a classic Wall Street debate. What do you pay attention to? Today's performance or tomorrow's potential? This is the core tension right here. On one side, you've got a very concrete warning sign that slowing growth is a real metric you just can't ignore. But on the other side, you have this massive, undeniable potential of a platform that has unbelievable scale and deep, deep cultural influence. So, which story do you buy into? And ultimately, this is the one question that's on every single investor's mind. Is this recent slowdown a true red flag, a sign of deeper problems? Or is it just a bump in the road for a metaverse giant that's still on a path to dominate the next era of how we interact online? The answer to that question, well, that's what's going to determine the next chapter for Roblox.